What I prefer to see, if I'm honest, guys, is this. I prefer to see something like price coming down slowly like this, compressed price action, like more build up, an inducement, a break, like that, higher, and then a mitigation of the low to then go higher. That's the ideal scenario. This wasn't like that. This was a bit different. So let's see what happens. Tagged me in. Yeah, so at this point, break even, and then look at that. Beautiful trade. Yes, family, it's your boy Roms with another trade breakdown. Hope you're all doing well. So today, I've got AUDCHF, and this was a clean one. Incredibly clean price action, incredibly clean liquidity to take into the trade, and liquidity to target as well. So I want to break this down for you. I think you will enjoy this one. Hopefully you can get some value from it as well. That's always the main priority. So stick around, stay tuned, and let's get straight into it. So what I've done is I'm currently on replay mode, obviously, as I usually am, and I've started it at the beginning of the day I took the trade, Wednesday, 10th of July. Okay, but what I'm going to do is go back to the higher time frame as usual, so you've got context as to why I've taken the trade. Of course, not every trade needs, you know, the hard time frame narrative or the hard time frame bias, but I like to do that just to, I think it helps educationally, and it also gives context to the trade as well. So if I go into the 4 hour really quickly, you probably don't even need the 4 hour like that, but let me just show what I'm looking at here. So what you've got here is you've got at the bottom, you've got a sweep of liquidity here. You can see that multiple lows were taken, 1, 2, and then maybe even not quite that one. This wasn't the mitigation. So you've got a sweep of liquidity here, right? And then you had the break of structure here, and then the new high created here. So what usually happens there is, if I go onto the daily, this little tip here, often what happens is when you've got liquidity like this, you've got a low and you've got like you know, a fair value gap, you know, just after where price has swept liquidity, price sometimes taps into that zone and then just goes, right? And that's you know, a great area of liquidity to take. I call that, little hint here, I call that breaker liquidity. Some of you will know why if you've studied ICT, but yeah. And then, so this is a 4 hour time frame. So the 4 hour time frame, this is here is where it's tapped into that breaker liquidity, so to take the breaker liquidity, and then it's gone the other direction. Okay. So when I just done this now, I've got a clear drawn liquidity, which I believe is technically is at least, you know, up here into this fair value gap. Excuse me, accident there. Into this fair value gap, or you know, even, you know, this high here, or this high up here, to take out just all the highs in general. But this is not necessarily what I was aiming for in this trade, because in this trade here, what you can see, this is the area or where I took the trade. You can see here on the 4 hour time frame, price has swept a couple lows here. You see this wick, swept liquidity and created a new high, and then price, you know, created internal liquidity for us to take here, which was taken, swept, a new high was created. Let's go down to the 1 hour. See even clearer. So again, all of this liquidity inside. So you got these semi-equal lows here. You've got, you know, this channel being created to be taken. You've got a few different types of liquidity, right? But the key levels are the one here for me. This was a key level here. Swept, created a new high as it took this high here, kept going higher. So looking at this now, you can see that in this price action, even if you go on the 15-minute now, for me, you know, there's no way that price is going to reverse now to go bearish. There's nothing that to show me that price is giving me, you know, reversal price action to go bearish. So my target or my drawn liquidity is this high here. All right, so that's what I'm looking at. And I'm thinking, okay, so if I'm able to get into a buy, I don't want to take any sells. Any sells that I take at this point will be incredibly short-lived. There'll be scalps, nothing more than that. I want to get into some buys. So if I'm looking at this now, I'm like, you know, you've actually got other opportunities here, because you've got ones that I've missed that I didn't see on the days when they happened, and such as I like this one here, when you've got, again, new highs are created. Price has created internal liquidity. You've got these equal lows, you've got these lows as well. Price is coming down, and as it's coming down, it's building up a channel to come down. That channel then is induced. It's cut, and then before that happens though, it's created equal lows during Asia. As it comes down, sweeps a internal low, which is a medium inducement. It's an inducement of the low of one of the previous days, and then go to the 5 minute. You can see here, if you're brave enough. So on the 1 minute, you've got a break of structure here somewhere. Let's call it in here on the 1 minute. Oh, sorry, the 1 minute's down here. That's the break of structure on the 1 minute. The 5 minute is not that great in regards to the break of structure, but what you do have is on the 1 minute, this will be clearer. I trained my eyes, so I can see the stuff on a higher time frame now. But on the 5 minute, you can see on the 1 minute, this would be like a bearish channel happening, and then the inducement, and then the break. But your entry, as price develops, could easily be on the sweep of the liquidity here. You might want to enter here if you want to, but in this case, you would have missed the trade, all right? So I often say I like to enter on the the final push down or the final push up. So here you could maybe enter on this line here, so for efficiency, or you could enter on the sweep of the liquidity, and then you could target, if you want to be safe, Asia high for 5R, or you target internal high, another internal high 7R, or you can target the draw, which would be a 10R. However, this 10R wouldn't happen overnight. As you can see, this is one day. This was Wednesday. Sorry, it's my bad. This is Monday. This is the second day. This is Tuesday, and the trade that I actually took was on the Wednesday. Sorry, you got to fix my chair. Super annoying. So that's an option. But let's just keep it, realistic and modest. Let's go and say you go for Asia high to be safe, a nice easy 5R. But what you've got here now is price has beautifully created a channel of liquidity. So I'm flying through this, guys, because I'm not trying to make it boring for you guys. And for some of you, it might go over your head as well, some of the stuff that I'm talking about. But you've got this channel that is created, as liquidity, and you can see price comes down. It's created another channel down, and it's created relatively equal lows with these two lows here. It induces the lows, takes out multiple lows from the previous day. Again, but this time on a 1 minute, it gives a break of structure, and then again, what I recommend you do, enter on the sweep of the liquidity, which would be this low. Sort of below the low, liquidity to take into the trade, liquidity to target the high of the channel if you want to, just to be safe. It would be one you have to hold it overnight, or you could target something a bit easier. If you want to, for me, like 5R for me is like a place where I like to take partials often if it's getting late in the day. 5R, easy. Partials there. So now let's get onto the trade that I actually took. So what we do have now is the same thing in regards to my target or my draw. So I'm believing that price is eventually going to hit this target up here. So 15 minutes for a second. So I'm looking at this now and I'm thinking, okay, if I believe price is going to hit this high, then I know that price must induce lower before it moves higher, or price must induce higher before it moves lower. I say this often, all the time in my videos. I'm sure if you've watched these videos now, you would have heard me say that over and over again. And one could argue that, maybe if you look on the 5 minute, maybe price has already induced the lows, because it's during Asia, that low there has been taken out. And maybe that is it. And then you've got the equal highs during Asia to attack. And even got the internal equal lows that were taken during Asia. And maybe we're going to go off from here. But let's see what happens. Okay, so still at this point, there's equal highs. And you could say here that this isn't actually, you think the low has been taken, but it is an Asian low. So for me, this is not one that I would be super confident with. And for me, on the 15 minute, I had a nice fair value gap here. I wanted to see price at least, trade into a little bit if possible, or at least take the Asia low into it to then induce higher. To then move higher. So induce this low, to then move higher. So we look at this now. So this is the fair value gap. Let's play on. Cool. There we go. So Asia has been taken now. But if Asia has been taken, you know, it's induced a lot of liquidity here. So surely it's going to induce liquidity on the other direction before it goes to the target, right? Maybe, maybe not. It depends. This is why you have to react and not always just predict. But I knew what I was looking for. I knew what I wanted. What I could see here, though, that there's plenty of liquidity here. And let's see what happens. Cool. Perfect. So Asia High was taken. It's probably a trade opportunity in here. Yes, there is. Asia High is taken. Gives the first high. Rejects. Another high. Then it actually gives us a break of structure. And then I'm not really liking these trading view charts. The candles look a bit weird to me nowadays. They look better before. I'm not sure what's changed, but it looks weird. Anyway, you got the gap here, which I don't like, but yeah, you can mitigate the high, and then you can target the Asia low, easy 5R on the M1, right? So that's a trade opportunity there. However, you know what I was looking for? I was waiting for the low. I had my target, my drawn liquidity, which is the high, and that's what I was waiting for. So if we're looking at this now, let's see what happens next. Whew. Aggressive. So let me talk you through this. The equal lows, relatively equal lows have been taken. Asia low has been taken, right? Wow, I can't draw lines right now. It's crazy. So Asia low has been taken. And then, you know, we've mitigated this zone here to fill up the imbalance there. And now I'll be looking at, you know, what qualifies as a valid entry. I'll be looking at this because what I prefer to see, if I'm honest, guys, is this. I prefer to see something like price coming down slowly like this. Compressed price action, like more build up, an inducement, a break, like that, higher, and then a mitigation of the low to then go higher. That's the ideal scenario. This wasn't like that. This was a bit different. So what you can see here is, for me, on the 1 minute, ideally, you know, a market structure shift or break of structure would be at this high here. So that's what I'd want to wait for, to know that the Asia low has been induced and the inducement has been completed, and that, you know, price didn't want to go lower. So you can see here, see what happens. There we go. Right. So at this stage now, price has given us the market structure shift or break of structure. But what it did do is take out this low, internal low, but it respected the low of the inducement, right? So some people, maybe if you enter off of order blocks and things like that, you might have thought, you know, this is an order block, it's gonna hold, and just take entry off of there. And for me, it's like, no, like I don't enter off of order blocks like that nowadays. Really, I enter based on liquidity. Although you can still enter, I'm not saying order blocks aren't valid, but knowing how to use them correctly is key. So it induced the low internally, but respected the main inducement low, which gave me confidence, and then it gave the break. So I was like, cool. Now where can I enter? So I go back on the 5 minute, and I believe, I'm trying to remember, but I believe I enter based on the efficiency of the M5. I'll be able to tell you, because I know that it was about a 6R trade, 7.9 it says, hold on. Yeah, so I put the stop loss below the low, and then I entered it on the efficiency on the M5. So let's see what happens. Tagged me in, and then we started moving away, I think. Let's just press play. Yeah, so at this point, break even, and then look at that beautiful trade. So This one here, I didn't actually take any partials. I know sometimes I take partials at like say 5R, or could take partials at this high, but because I was quite confident in the draw on liquidity and quite confident in where price would go, I actually held it, and it was only a 6/7R. So, you know, I was confident just to hold that all the way and just set my hard take profit at this target, which was hit. So hopefully you guys found that valuable. But if you want another trade breakdown, then hit that link in the corner, or that video in the corner. It's worth your time. All right. God bless, take care, and we'll speak soon.